Good morning in Europe, good evening in the United States. This is Ahura with another day trade video. In these videos, as you know, we are watching the market, what happened in the market from fundamental side, the news, and how they're going to affect the market, what we have to wait for from today's financial market. As you know, so far we had Chinese central bank interest rate decision, and People's Bank of China left the interest rate unchanged at 3.85. This means that the Chinese central bank still trying to hold its dovish policies. It's also dovish policies for longer term, for a bit longer term, and to support the markets. This let's go to the chart. See that as we know, the US dollar index, while it's went moved above 96 and still holding this level above 96, and it's probably will keep that. The main reason of the higher US dollar index is the weaker European currency. Europe, because of increasing COVID-19 cases in Europe and higher increase of the another waves of the lockdowns as it happened in Austria, and Germans officials also, they told they may follow this and they may put some restrictions for businesses. European currency moved lower against US dollar, and it means that when the European currency, as you know, euro has the biggest value, almost more than 76% in the US dollar basket. So that is the biggest part in US dollar basket. So when the euro is going down, US dollar index can increase sharply. Let's check the Euro USD chart. Euro USD chart, same as we were talking about that in the last week's. It is under 1.16, 1.15. It's moved to a clearly downtrend, and today it touched even earlier last week on Friday. It touched like sort of multi-months like 1.1238. It's like the lowest level since, I don't remember, since 2020 in May, since May 2020. It's like more than 1 year and 4 months, like 16 months low. US dollar index, while it's in the 16 months low, US dollar index in the 16 months high. This is the US dollar index, you can see it's in 16 months high. And since the COVID-19 risks is increasing in European current countries, we can see weaker US euro, and therefore increasing US dollar instead. The gold, as we saw last week, the gold in the beginning of the closing is closed under 1,850. For now, market risk is the market risk is a little bit lower after the US dollar 10 years bond yield fell to 1.56 earlier today. It's increased a little bit. Right now it's still trading on 1.56, but a little bit above 1.6, 1. Yeah, it's moved to, sorry, yeah, it's exactly at 1.56 last week. So it means that, after a little bit increase in the beginning, now still rates low, so the lower risk in the market, the lower rates, bond yields in the market, means that the market risk is still increasing. So we can see that safe haven in more demand for the next day. So it means that the US dollar index still should be in the demand, as well as the gold. So this 10 years bond yields at 1.56 means that US dollar it means that we have to wait for gold to stay around this level. So it means that we will have more demand for the gold. On the stock market, Asian stock market fell earlier today as the market risk was higher. We are at the beginning of very interesting week. This week we will have the holidays at the Thursday and Friday in United States. So this lower lake of liquidity, or lower liquidity in the market, it will put the stock markets under pressure. It means that the markets will be a little bit more under pressure because because US traders and investors will be out of the market, and lack of liquidity can bring the higher risk in the market. So it means that the markets can have the sharp movement, so we have to take care about that. This week also we will have so many speeches, especially from United Kingdom, from US and Australia, from European central banks. Don't forget that this week we have the New Zealand central bank in the spotlight as well. We are waiting to see at least a 0.25% increase in in New Zealand central bank's monetary policies or interest rates. So it means that at least in New Zealand, the central banks is moving towards more hawkish policies. The stock market after Friday fall. Yeah, you can see that the Friday finally the increase and the fall. Now the futures trading a little bit higher, but still, as I told, still I am technical. While the technically they are still up in uptrend, and then Nasdaq in a clear uptrend. Dow Jones also technically the downtrend is broke. The downtrend this is the go here. This the you can see the downtrend line is broke. It's trading above the trend line, but still with the RSI at 47 is in day trading. I mean in daily trading in each one chart. RSI at under 50, OBV trend line is weaker, so we cannot still confirm the uptrend. So it will be still a little bit under pressure. On the other hand, for SP 500. For SP 500, we can see that still trading above. This is the trend line. Still trading above trend line. Technically, it's in an uptrend, but fundamentally, with the data that we are waiting to see this week, with the PCE, with the we are waiting to see. We are waiting for PCE and core PCE and totally the PCE numbers, the spending and income numbers on Wednesday, as well as FOMC meeting minutes. These two together, while we know that the Federal Reserve members, their speeches last week, they had a hawkish policy. So probably in Fed meeting minutes, also we will see these hawkish tones. So if we see these hawkish tones in Fed meeting minutes on Wednesday, you can see the stock markets totally cannot be that much encouraged for now, at least. So this means that yeah, increasing inflation still will be in the spotlight. For the week ahead, also we are waiting some data from European countries, especially PMI data from European countries, since this data these data are expected to be a weaker data. So in the currency market, more downtrend in more lower levels in the currency markets is still expected. For the cryptocurrencies, in the cryptocurrencies market, let's open the Bitcoin chart. As we talked at the last days and the last weeks, that the Bitcoin currently the totally cryptocurrencies market, in overall market I'm not talking about a specific specific coins, but generally the cryptocurrencies market. The totally what we can see in the cryptocurrencies market, that with the different pressures that we have on the market about the legalization and stuff like that, we can see we can see that the pressure on the cryptocurrencies market will be to increase. So it means that the higher pressure on the cryptocurrencies market for the regulation, for the clearance in the clearness, more clearness on the transactions, the reports that the different companies and different exchanges, they have to report to the RSI. All this together more probably will put the cryptocurrencies a little bit under pressure, while SEC still looking after legalized stable coins. So all this together for now, because we don't have that much encouraging news that to encourage the cryptocurrencies market. So these news all together most probably still will put the cryptocurrencies still more under pressure. Bitcoin under 60K for sure will continue its downtrend. For the Ripple, $1.06. We are at the $1.03 right now. $1.06. It's in the pivot point, and under $1.06. The downtrend is more probably For Ethereum, the pivot point sits at 4,200. Any number of under 4,200 will put the asset under pressure for lower levels. This is general market situation right now. So, the total what we can say for now is that the higher risk of the COVID-19 a little bit can put the markets under pressure, and it will increase the US dollar demand. The geopolitical tension about the gas also, we shouldn't forget about the geopolitical tension about the gas, which there's a crude oil chart. You can see the crude oil chart today after a little bit weakness on Friday, a little bit more weakness on Friday again started to increase. It's one of the reasons is because that the European tensions about the gas in Europe still didn't finish, and still we have so much tension on the European countries about the gas, the lack of the gas, the shortage about in the gas market still can increase the demand for oil. So this is the general what's happening in the market, and we're waiting for a little light week with the sharp movement. Don't forget about that because of lack of liquidity. Thank you so much for watching this video, and hope it will be useful for you. Don't forget to put your comments, your idea on the comments, so let me know what exactly you want me to cover in next day's videos. Bye. See you tomorrow.